We're looking at investing in property. Do you go for the bricks and mortar or do you go for the paper on the exchange? Let's just come back to a point you were discussing in the break, John, about how people buy because they understand certain areas, like
yes,
the residential property market.
Jeremy, I always try to make the point that I don't think there's any right and wrong answer when it comes to long-term returns. Very debatable as to which asset class outperformed the other. I think what's more important is to play to your strengths. Now, the nice thing about property is that, or residential property, if I could compare it with commercial, is at the moment I think the returns are possibly better on commercial.
Right.
But Warren Buffett once said, or I believe he said, that he doesn't invest in anything he doesn't understand. Now that's the beauty of residential property. Is more easily understandable. I think it's a lot easier to understand a house and to manage a house. You do have to upskill yourself on how to manage tenants, but it's a lot easier, I think, and simpler than, say, an office block or a retail mall. So if you're going into the direct investment, that can have its benefits, and you could pay a premium for it and take a lower yield because you'll do better because you understand how to manage it. So there's those considerations too when investing in anything, I think, is what you understand, what your strong points are. And then the other thing about property is you can incur debt quite easily. Perhaps people will say not at the moment, but certainly a lot more than if you wanted to buy shares on the stock exchange. You incur debt, and that's why a lot of people have made money out of property, not because the asset classes perform necessarily well, but because it's forced financial discipline on them. The average individual who's invested in a house, some people say, oh, you should have rather rented, you would have saved money and you could have invested that in shares and you would have done better. Maybe so. The problem is that the average household in South Africa doesn't invest that difference in shares. They go down to Sandton City and they spend there and they don't get any return on it. So it's a practical thing. People incur debt, they've got a contract, they are forced to pay it back, and the overwhelming majority of people do, and when they're finished, even if the asset class hasn't performed well, they've still got an asset that's worth 1 million, 2 million, whatever it may be. And that's an important point with property.
And they've also learned to become more financially strict.
Yes, it does force discipline on you. It's very difficult to say to yourself, and for the average household, I'm going to consciously put away X thousand a month to invest in shares. Very few of us do it.
You were talking about this new influx of coming into the listed side of it. Where is all that coming from? Because you mentioned a figure of, I think it was 15 billion, Marc.
No. Yeah, what I meant was that the sector, the local sector, commercial listed sector, is probably going to see listings amounting about 15 billion. New.
Where's all this property?
Well, basically coming from some of the pension funds, some of the new merged funds. So a lot of assets, a lot of new shopping centres that aren't listed. About 4 new funds are bringing probably about 7 major shopping centres to the sector. So those are the kind of areas where where you see that kind of 15 billion rand growth. Obviously, this happens over time. Throughout the course of the last 10 years, the sector's grown from 10 billion to 125 odd billion. So you've had mergers and acquisitions and funds that have grown very large and then have broken up again and have reformed and so forth. But at the moment, we're probably going to see about quite a new.
So you mean when you're talking about these? Let's talk specifically about these shopping centres. There are people actually going around pulling them together so they can list them.
Correct.
Under a sector.
Correct. Yeah.
So you will be able to invest in a retail mall or a grouping of retail malls.
Yeah, I mean, South Africa doesn't really have any specialization in its listed sector.
Why?
I think it's really a size, it's a scale thing. In America, you have very specialized funds, focusing right from residential to hotels to even energy kind of related stuff, renewable energy, for example, industrial offices. There's a lot more specialization because of the size of the market. It warrants it. But in South Africa, your funds are generally diverse funds, but we are starting to see some specialization happening. Yeah.
You did say, though, that there's some changes coming from government which would bring us on a par with the rest of the world, and we could see foreign money coming into those listed funds.
Look, I mean, I don't know, probably 7-8% of investment in the listed sector is foreign based now. It's a lot more than the 1 or 2% a few years ago. So already that's been happening. Obviously, some of these global markets have been chasing yield. South Africa has been pretty attractive, part of the emerging economy picture. So its listed sector was also relatively cheap going back a few years. So I think that makes a lot of sense. Obviously now, whether it's affordable or cheap is quite debatable. And probably in the short term, we probably see some debate around that, probably a little bit expensive at the moment.
Well, let's go back to the fixed property market then. Are we still seeing foreign buying in South Africa as much as it was?
It tapered off a little. I think one must understand. I don't think due to any sentiment deterioration towards South Africa, more a case of
They just didn't have any money.
Well, the rand has gone through a relatively strong period, so property price growth in foreign denominated terms has risen quite substantially over the past couple of years, despite not in rand terms. But also, yes, a lot of your typical buyers are from Europe. They buy heavily in places like Cape Town and countries like that in the United States. They've gone through heavy recessions themselves. Property globally isn't the flavor of the month at the moment like it was a few years ago. So I think all those factors have taken their toll. And yes, so in our estate agent survey, what we did see was a decline in sort of 2009 and 10 in the percentage of total buyers being foreign buyers.
You mentioned Cape Town. I was looking at a document that you and Edward Kellerman put out on movements in South Africa, which provinces sellers are relocating to. And you look, for example, out of Gauteng to the Western Cape, you're looking at 38%. Mind you, from the Western Cape to Gauteng, and I would imagine that's for work purposes, the number was 32%. But there is a definite drive to the Western Cape from a fixed property point of view. There are a few factors behind that. What are the main ones?
Yes, there was we try and estimate the net migration from deeds office data, and there was the Western Cape was the only province of the 9 with a positive net inward migration. In other words, more repeat buyers estimated to be moving that way than vice versa. And that's been going on for quite a couple of years. And I think, Jeremy, it's a combination of factors. Most people do move for job opportunities, even the Gauteng people moving the other way. They don't just, the retirees and the people who want to go and relax at the coast in a town are relatively few in the grander scheme of things. So it's about opportunities. Now, the Western Cape has developed a strong services economy. It has had the fastest average economic growth rate over the past decade or so, according to Global Insight estimates. So there is economic opportunity there, although Gauteng is still the biggest economy by far. But it's also got that balance. There is at least a perception of better lifestyle there, it would seem, than not only in Joburg, but it would even seem that there's a net migration towards Cape Town from the KZN side as well. So they seem to have got a good balance. There's a perception of it being a well-run province, factors like crime and so on, which we live with here, perceived to be not as bad there. So lifestyle factors perceived to be better, and then also a very strong economy, which is probably what KZN lacks in a certain way. It has a lifestyle, but it perhaps doesn't have a stronger economy.
Marc, we're talking about, from the fixed property point of view, this sort of rotation. Do you find the same thing in the listed properties, that you get rotations in and out of commercial into the unit trusts, and or are people more fixed in that sort of investment?
Look, I mean, people take different positions, but ultimately, property is a long-term thing, and even in equities, it should be a long-term hold. Ultimately, it's just really degrees. Some of the pension funds, need to up the exposure to property from, let's say, 5 to 10 to 15%, and those are the kind of movements that are being made. But I mean, maybe the point I wanted to also make, just coming back to direct property and sort of where, what's the flavor of the month and all that. Obviously, again, being a longer term hold, the thing about Cape Town, I think we've seen a lot of investment in the office market, for example. So it's been leading the cycle. Its vacancy rates were the highest a few years back. And we see its performance now relative to some of the other markets, like Free State offices, for example, and some other secondary markets, if you like, being, performing less well. So, so it definitely moves in cycles. You need to understand where you're investing in. You need to understand where things are oversupplied. You need to understand how the economy correlates to these different sectors. There's a strong relationship between the economy. We reckon about close to 0.8. Of a correlation between GDP and how property actually physically performs. So all of these things, like John alluded to, the way that the Cape's managed, etc., are all factors that obviously drive economic activity ultimately.
But there also are other factors that are coming into play here where from what I've been able to see, that there are a lot of more specialized areas within the different sectors coming into play. In the fixed markets, for example, you're now starting to see, for example, student-let flats being built in places like Stellenbosch and Pietermaritzburg and that, where they're targeting that specific audience.
Yes, well, students is probably a good, reliable. I get a bit nervous about what students do to the places.
No, because
having been
because
one,
we were.
yeah, yes, but it's probably as non-cyclical as you'll get when it comes to rental markets. I mean, a place like Stellenbosch, every year there's a certain amount of students that need accommodation. That would be my guess. So it's probably quite a very stable market. At the moment, the focus is very much on these sort of more stable markets in these tough times. And besides that, something like student accommodation, if you could take it a bit broader, it's about places where there are stable, more services-driven economy. City of Joburg Metro is one that springs to mind, and City of Cape Town Metro is another that springs to mind. Holiday property at the moment is very much off the radar screen. That's a very cyclical sector, and towns driven by holiday property are very, very cyclical, unfortunately. And in tough financial times, which it is at the moment and probably will be for a few years, very much off the radar screen. So yes, it's about the sort of stable primary residential demand-driven markets, and then yes, if you can get a specialized market like a student market, that's probably even more stable than most.
If I gave you each 2 million rand, would you put it straight into the equities?
If I had a choice, I would probably still diversify further. I would probably go for a share on something fixed that I knew, I had an inside track on, that I knew would perform, and I would go with listed property. Yeah.
Would you go for fixed or listed?
I'm a listed property fan. Sounds bad to say that because I'm in the residential, I'm in FNB home loans, but that's my choice. I'm not wild about managing tenants, but you lose out. You pay a management fee for someone else to do that, and that's the sacrifice you take. If you want to buy yourself a job, so to say, rather go directly and then you manage the property and you take all the returns from it. You don't have to pay it to a management team.